Good morning, everyone. I'm Vince Lancy. This is the Gold Fix Market Rundown. It's 8:09. We asked today, did the Treasury's Scott Bessent just put a target change on the table, suggesting the Fed should keep 2% as the anchor for now and then move the range once credibility is reestablished? And then we also ask, what stops this silver rally? Seriously. Before we get to the markets, we wanted to share some predictions, if you will. We almost never predict price. That is too hard. And as fun as it is to do, to be correct, it's folly for the way we think. We like to, however, handicap behavior and then back into price from that. And so for 2026, we'd like to share three predictions with you all. First, we believe the Swiss will cut a deal with the US to support their soon-to-be flagging refining industry as pursuant to a way to alleviate tariffs. Second, we believe the LBMA will essentially become a subsidiary of the US COMEX, not in name, but in behavior. And the CME, we also believe, will raise margins to the point of making COMEX futures essentially a spot market, 100% effectively margining them. We believe ETFs and stablecoins flows will be the dominant investment vehicle for gold and silver in the US going forward. And we believe when that happens, you will not want to be a seller of your physical. Now, ask yourself, what price must silver and gold go to force such behavior like that? And that's where we stand. All right, the markets. 10-year yields are unchanged offered. The dollar is up 2 basis points. The S&P 500 is up 1. The NASDAQ is up 6. The VIX is a little bit higher. Gold is vacillating around unchanged, up 20, down 10, 44.81 last. Silver is strong, but really off the highs in the last half hour. We'll look at that in a second. Trading 71.77. Copper 550. WTI unchanged bid. Natural gas offered. Bitcoin down a little bit again. Ethereum offered. Palladium and platinum down. These markets were, the metals markets were all stronger overnight for the most part. Very strong in silver and gold, and now they're backing off. Hard to think anything about this because it is holiday trading. However, it was easy to see that Shanghai would be bought because the US close was bought, and then Shanghai opened, popped, and then some profit taking came in. I think, I'm not sure, but the premium in Shanghai is markedly higher than London and the US again, which is a sign that there's no metal available from there to come here, and eventually the government will allocate more gold purchases, and that premium will shrink, dragging price higher, global price higher. Okay, so there's the front page. Let's get to the first two stories. Did Scott Bessent just tell us that Powell caved on 2% inflation? Secretary of Treasury Scott Bessent said the Fed could revisit its 2% inflation target once inflation is sustainably, whatever that means, back at 2%, arguing a target range may be more realistic than decimal point certainty. In a Bloomberg interview, he warned that changing the goal while inflation is still above target would signal tolerance for higher inflation. Correct. Bessent also linked fiscal discipline to structurally lower rates and criticized post-pandemic QE as lasting too long beyond the crisis window. You know, he made an interesting point about that. There are people, most of us that we know, that criticize QE and Bernanke and his helicopter money as being something that forced people to buy stocks because safe havens were hurt. And the government also steered people away from gold as a safe haven. And so Anyone who had the money to buy stocks bought them. Well, most people don't have money to buy stocks now. And his point is going out too far on the yield curve, uh, uh, removed the safe haven, and that only helped people who had the means to benefit from it, to literally rotate, people with stock accounts. Now, I think that's really valid. And I want to put that in context of what he just did. Now, I'm not a fan of what's going on right now, and that is the Fed is now lending at 3 years out by buying bonds, and the Treasury is uh, financing at 90 days out, give or take. And so they're doing a QE. Okay. So, and I'm not defending them, but they're doing a QE. That's a QE. Okay. I don't care what you call it. If you're defining QE as how it benefits versus what it does, it's, six and one, half dozen the other. But what they're not doing is yet, they're not doing QE at the 10-year or 20-year. And so I think the point is QE is necessary, but we don't want to go too far out. His criticism really is that we coddled the 10-year bond for too long and short-circuited behavioral market generated metrics that would have kept us from being in too much of a bubble. In short, he basically just shit on Bernanke's QE concepts. And we're not so sure we disagree with him there. Anyway, how the silver rally might end. Now, this is a piece by off of Real Investment Advice that we glommed off of Zero Hedge, and it's actually very good. It's a nice historical piece of what short-circuited the 2011 and 1980 silver rallies, and it predicts. It goes so far as to say it will end this way, and we're big believers in history repeating itself. That's basically what we've been saying for the last year here with mercantilism and secular changes. But we're not throwing water on it. You really, really should read this because it will happen the way he's saying. The question is how much of an effect will it have on the market? And we also put in a comment there that we say all the below that he's saying is true. There is one glaring difference between now and prior events cited. Margin rates will continue to drive out weaker leverage longs as the sovereigns bin metals out of the public's hands. Futures are dying as they are tools of global trade. This is the point of why we say do not sell your physical. All right, moving on. Both of those stories are unlocked. News and analysis, there's what we put out yesterday. And the data today is jobless claims. Finally, we have an ask. There has been a lot of interest in the MAGA and MALGA hats that we mocked up about a year ago. So we created a store and we have those. We'd ask you to consider buying a hat from our newly launched merchandise store. Delivery should be by New Year's, and we promise all proceeds will go towards purchasing more physical. Promise. All proceeds, not profits. There are no profits, essentially. There's another version of the hat. That's gold. And where's silver? There's silver, right? And there's the four designs. And there's a hole in the back. It's an adjustable hat. It's not a really expensive hat, but there's a hole in the back. So the ladies can wear them as well. Anyway, we promise you we'll be buying more metal with those. So that's the charity. The charity is helping your stack go up in price. Anyway. From us to you, Merry Christmas. We'll be off tomorrow, but we will be back on Friday. And we'll see you before the new year. Take care.